What adjustments are you thinking about for the portfolios after the Jackson Hole speech? Or do you think there's any change you want to make, or you can kind of stay in the course?
Yeah, it's a good question because we have one third of our normal allocation out of the stock market. Actually, we're a little less than that now because our stock market portion has grown as it's come back, but nonetheless. So I still feel like a two-thirds in and one third out is a kind of a reasonable scenario. The T-bills are still doing well; they're still paying well. We'll see what happens as they cut rates. Those will come down too. But what 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 concerns me is that the data set that we're all operating on. So AI is just like the dot com. We should get a big old boom just like the dot com. I agree, actually, and that seems to be happening. And we're not even close to being at the end. I'd say, if anything, we're in the middle innings at best of the run that would come out of that because we haven't got the stupid piece that's going to happen at the end of this.
Yeah,
Watch, it's starting.
someone's gonna start putting like bingo.ai or something
Yes.
like that, where they just attach AI to the name.
Yeah, exactly. We're not there yet. We could be there by next year, even, and we'd probably be there a lot faster if it wasn't for some of these tariffs and such too. But we don't have we don't have a game plan for how to handle tariffs because it doesn't happen enough, right? To see what can happen. We had small tariffs done in 2018. We didn't respond to those at all. We kept right in there, rode right through all of that because it was a really small amount of money altogether. This is huge. It's the entire world. It's, what a minimum of 15% seems to be, up to 50% tariffs. I've got China, is up there. Got some of our big trading partners,
Hmm.
Canada, Mexico, really, amazing. So, uh, you know, I think that I still want to see where the impact's going to be and how that's going to transpire as these prices go up. How much does that impact? Because what happened in 1930, unemployment went from 6% to 25%. So different time frames. This is not a depression. They were already started the depression by the time they started these tariffs. But nonetheless, it has a potential impact on employment. And we've already seen that.
Hmm.
Even without the tariffs really hitting, we've already seen employment soften up from 186,000 new jobs last year to 35,000. There's some other potential reasons for that without lower immigration and what have you, too. However, you know, that that's just because of all the confusion, right? The chaos is creating a scenario where people don't want to spend money as much, and companies aren't spending the money as much. So yeah, I'm still in the same boat. I'm really against not following the Fed, so I'm struggling with that part. When the Fed lowers rates, I want to be in, um, but that was because every time they lowered rates in the past, we didn't have tariffs sitting, here.
Yeah, and they haven't lowered the rates actually.
No,
We still have till September for them to actually have the possibility
that's
of it.
true. There could be something that comes through in one of these, because we're going to get September 17th, right? So we're going to get another PCE report here at the end of the
And then we
month
should have one more CPI.
and one more CPI. That's right before. And so, we saw CPI come up this month, which usually means PCE is going to follow suit. Not that dramatic, but what we really saw was the wholesale inflation was up
Hmm.
a lot. And so, we'll get another PPI report also. It usually comes the day after the wholesale inflation. So, yeah, it's possible that they don't do a cut. I think they will and can, because if you just ignore the fact that prices are going up because of tariffs, prices might not be going up otherwise. And so you can lower rates, create more demand, still doesn't change the inflation picture that much because most of that inflation is being pushed through by higher costs and at this tax, this tariff tax. So, um, yeah, but the overall impact of what that's going to happen and the possibility of putting a financial system, a global financial system, under tremendous pressure, um, there's a higher risk there. It just is, and so that's how I view investing. It's about probability. So what's the probability that the market is much higher next a year from now than it is now? And that probability is down from my view in 2023 and 2024 because of tariffs and deportations. And We'll see if that turns out to be warranted or not. But it seems logical, right, to
Hmm.
me. I mean, it just does. When a market doesn't always operate in that zone, but it generally gets back to that zone. Logic eventually plays through the market,
But
over the longer term.
yeah, but the market also plays on greed and fear too.
Hmm.
So in
Yeah,
intense moments, you'll have very much a greedy period and a very fearful
yeah,
period.
exactly. So it's, you know, I hope we're wrong. I hope the market just goes and tariffs don't mean anything. We'll get back in. I'm fine. We're doing okay, you know. And so anyway, that's where that's a good question.